Hey everyone, Mayor Mike here, and I'm here with Steve Shepro, our contracted assessor, for another special installment of Talking Point. You know, when the city gets their money for the budget, primarily it comes through property taxes. The state and the federal, they get theirs through income tax that you and I pay out of every paycheck, and a couple of other sources. But generally when municipalities like a city have to make expenses, they get their money through property taxes. And of course, that's a hot button item for everyone, but it's going to be particularly important for Stevens Point residents in the coming weeks and months as we move into the 2024 budget. The law requires us to have a value on your property that is as close to the actual value as we possibly can. And Steve's going to talk about that today. Steve, welcome to the show.
Thank you, Mayor.
So talk a little bit about that. So my home, let's say it's valued at $100,000. Where would my assessment normally land, and what are the rules regarding when those values change, because they're constantly changing?
Correct. What happens really is it's really directed from the Department of Revenue. It's not the city's choice to do a reval. It's pretty much dictated by the Department of Revenue. And what we do is we review sales for the last 5 years. And that's where we use it. Of course, it's been a very strong market here for the last 3-4 years, and we're seeing that impacted, and it still is. So what we do is that at the same time, the Department of Revenue reviews the same sales, and they look at and see what the assessed values are compared to what the sales are, and that gives us a ratio. And so I say, as an incident on your house of being 100,000. We're seeing pretty much what we're going through. If we didn't do the reval this year, we would be down in the low 60% range on homes.
So you're saying my assessment might be closer to $60 or $65 or even $70,000, even though my home is valued at $100,000.
I'm saying, yeah, well, it's valued at 100,000, but it's going to probably go to about 150 or 160,000.
Okay.
Correct.
Gotcha.
On the reval, that would put it back up to market value.
Mm-hmm. So ideally, and correct me if I'm wrong, you want your assessment to be what your house is worth. In an ideal world, that's what it is. If I have a $100,000 house, you assess me based on a $100,000 value, right?
On a reval year, that's correct. Yep.
Yeah. Yep. So, and because things change, I mean, we buy homes because they're an investment. We don't expect our investments to go down in value. If your home is going down in value, you're probably doing something wrong. So generally, we see those things appreciate. My house is worth more now than what it was when I bought it, for example.
Correct.
When I bought my house, I got an appraisal. What's the difference between an appraisal and an assessment?
It's really based on time, when the appraisal was done. The way revaluation works, at least for the city, we try to do it on about a 5 or 6 year cycle and keep it in compliance pretty much. It's just that the market's been very strong, and that's changed. So that's where you get the difference is when you have an appraisal done, that's for that period, that year. We do the same thing on this year, on the reval year. Now for the next 5 years, if the market goes up or down, we will track that and make our adjustments in that 5 year, at the end of the 5 year period.
Okay.
So that's why it does fall out of line with the market, but everybody's at the same level. That's more important than anything. One of the things that was very beneficial for 2017, the last revaluation for the city, is it evened things back out. We had some people go up a percentage more than others, but it only brought it up to the market value. And that makes sure that it's fair to each property owner, that it's only for what they own, you know.
Sure.
And that's where the difference is. But the appraisals, it's difficult. I'm always happy to look at them, but we always got to remember the dates on them and stuff, when they were done. And if somebody has an appraisal done, say that if they would have had an appraisal done 2 years ago, we wouldn't have adjusted the value of the home up to that. We wait to the reval year and bring everybody up at the same time. So.
And when we say reval, we mean revaluation, and what that means is we take another look at the value of your home periodically, right?
Correct. Yeah.
Because again, ideally, your value matches your appraisal and your assessment, but the market fluctuates so much that you'll never get the same. From a homeowner standpoint, of course, I want my appraisals really high and I want my assessments really low, because we use that assessment to calculate property taxes. We use the appraisal as far as an asset or the value that you have, your investment, if you will. But in an ideal world, they will all be the same number, right?
On the reval year, they will be very close together,
yeah.
right? We
Yeah.
ought to stay consistent with that. I know that the concept out there has always been, or the idea has been that the assessments seem to lag behind the market, and what you could sell the property for. And that's true because we wait, sometimes 10 years it used to be. Now it's more like 5 years, just because we don't want to be that far out of compliance, you know? But like I said, it really is just regulating the difference between sales and the assessed value.
Right, and I say we talk about the revaluation and the need that the fact of the reality is that they will never be equal because the market changes so much. What you're willing to pay for a house may not be the same amount that I'm willing to pay for that same house. So a sale price is also a pretty good indicator of value. Since let's say you bought my house for $100,000, you are kind of confirming that my house is actually worth $100,000.
Correct.
Because
Yep.
you bought it. And we know that, like I said, our value, we want the value of our homes to go up. That's an investment. So when we do this reevaluation of the assessments, we want to make sure that our property values are in line with what the market is dictating. And that's what we base our mill rate on. And the mill rate is the dollar per $1,000 of value on your home that you're expected to pay on your taxes at the end of the year. It's a little bit of a convoluted or complicated process, but just because my assessment goes up doesn't mean my taxes are going to go up in the same proportion. Now, I don't know of anyone whose taxes ever went down for any reason.
Correct,
That's just the nature
yeah.
of the beast, right? But just because, let's say, if I get this revaluation and my property value went up 30% or 40% or more from the last time, that doesn't automatically mean my taxes are going up 30 or 40%. And we need to be clear on that. The council will decide that when they set the mill rate, but let's talk about that a little bit, not using specifics because we don't have any of those numbers yet, but if my home is $1,000 at the last value or $100,000 at the last valuation, and now it goes up, let's say 50% to $150,000, and let's say, just for simplicity's sake, that our mill rate or tax amount is $10 per thousand.
Correct.
Ideally, the mill rate should go down 50%.
Correct.
Now, it won't. We're not talking hard numbers or specifics here. But you can generally think that if the average increase in property value is, let's say, 35, 40%, and you are above that, your mill rate will, or your taxes will probably go up.
Typically, it would be the difference of that average, you know. So
Yeah.
if you're above, say the average increase was 40% and you went up 44, your taxes would generally change 4%. But that's based on all the budgets, the school, the county, and the city. And really what it is, you take our number, divide it into the budgets. Our total value of the city is going to be around $2 billion. And
Billion with a B.
yeah, 2 billion. And so that, you know, the previous one was 1.7, whatever it was, or 1.5. So as you see that increase, what happens, you're dividing one number into the other, and that's where you get the tax rate. And that's what's determined. So it depends on the entities, you know, the spending for the city, the county, and the schools.
The taxing entities are the city of Stevens Point,
Correct.
the county of Portage, the public school district, and Mid-State Technical College.
Correct. Correct.
Those are the four taxing entities. Now, it gets really weird if you live on a lake and you're part of a lake district like McDill. They also are a taxing entity. So if you live in the Lake District, you'll also have that bill. And those 4 or 5 groups give you your total tax bill. So when you pay your taxes, the city keeps their portion. We send a portion to the county, to the school district, to Mid-State, and if you're in the Lake District, back to the Lake District. So all of those are independent of each other. We don't sit in a secret room and say, okay, you know, if you're going to raise 2%, then we're going to raise 2%. That's not how it works.
Right.
The city actually has restrictions on how much they can increase their spending from the state of Wisconsin, and we call those levy limits.
Right, the net new construction.
Right, and
So.
so that is, you know, net new construction. Take everything new that's built, the value of that, minus everything that got torn down, and that gives you your net new. Last year we were at 2.52%, I believe. This year's going to be a little bit lower, but the state then says that we can only increase our spending by that amount.
Correct.
So the most we could do last year, for example, was increase taxes 2.42%.
Correct.
The valuation timing also comes into play, right? We do this periodically to try and keep it as stable as possible. The market can go like this, but we want to keep that assessment as stable as possible. But other municipalities, for example, Plover did theirs last year, right?
Correct.
And there were some significant jumps in there. If you wait a longer period of time or the timing is off, your values can jump significantly one way or the other. But Plover did it last year. So they're in the process of calming down. We're doing it this year. Do you know anything about a county-wide revaluation where they're going to do everybody else in the county that hasn't done one yet? Town of Eau Plaine, for example?
Well, if you look at it, you could go on the Department of Revenue site, and they have a list of every municipality in the county here. But every municipality is done on its own here in Wisconsin. Other states, Minnesota, Ohio, I believe, Illinois, they do county-wide assessment.
Okay.
So it's determined, and they could equalize it out. Here, what it is that each individual municipality does their own values, and then it's equalized by the state. The Department of Revenue Equalization Department. They equalize it to make sure that people in the townships or the village are paying the same share to the schools here or to the county. That's it. That's why they equalize it, so you don't have low numbers against maybe we're at 100%, they're at 70%.
Right.
And because of the increase in values, every community had to do a reval. There's no doubt in my mind. The only ones I would say different would be Madison and Milwaukee. They go on a yearly basis. They change their values every year and try to keep it at 100% every year. That's the thing you can do. We tend to look at each year on its own and look at 3 years of sales. We're very concerned. We've had a very big boom here. We don't know what's happened, and we don't even look going ahead. I don't predict that. I work with sales that in the last 3 years, and that's what shows us. Now, if the things change, in Wisconsin, we've been very fortunate, especially Stevens Point's been very fortunate. The values are holding very well. We don't see the downturn, as you can see in some other communities. And so I think that's a big plus for Stevens Point, is that you have the sales still being very strong. But if it slows down or stops, we will have to look at it. It works both ways. We got to be within 90% of the valuation that the Department of Revenue determines what's our overall level of assessment based on sales to assessments. And if it goes above 110 or below 90%, then we got to start looking at a revaluation within a couple of years. So.
Yeah, and that's what I wanted to talk about too. Is we've got a window that the government gives us. They don't want it lower than 90% of actual value. Correct. They don't want it higher than 110% of actual value. So as long as the price fluctuations are within that 20%, we're generally okay. If it falls outside of that, then legal requirements get kicked in and the clock starts ticking.
Correct.
So, for example, we've got great sales, and we've had great sales in the city for a long time. Values are going up. I talk to realtors where they're getting offers that are more than the listing price because the demand is so high.
Correct.
We're working on creating some additional housing options for people to try and stabilize that a little bit. But let's say the market crashes, and in 2 years, sale prices plummet. For whatever reason. I can't see that happening because we're awesome and everybody wants to live here. But let's say they plummet and all of a sudden my house drops 40% in value. That gets the clock ticking, and we have to do another revaluation because we're outside that 110% now.
Correct,
right?
correct. What's very important to understand, only, we can be at 105%. That's a very difficult to be. So if somebody pays $100,000 for a house, if we're consistent, if we have 105,000 on there, the Department of Revenue said that's fine. We have, because of that 90% and 110%, we are also given 10% to be within the assessed value based on the appraisals or any other thing for market value. So we can be within that range. But what's important to know is that we want to make sure everybody's at that same level. So you don't have, we have this happen in other communities where if you chase sales, we do not do that. We will look at things that are changed throughout the year, but then we will basically make them adjustments for remodeled stuff that we didn't have or no permits were taken out. So we try to keep people at the same level. That's what makes property tax to be the fairest.
Right, because I don't want you at 90% value and me at 107%
Correct.
value.
And that's what we try very hard. And and you mentioned something earlier about sales. It's so difficult. We probably have somewhere between 300 and 500 sales a year that we would consider an arm's length transaction.
Explain what
meaning-
an arm's length transaction is.
A willing buyer and seller, that it's a market value. There's no relationship between buyer and seller. It's not a bank sale. It's not a foreclosure or a tax deed. So it's an open market sale that anybody could have paid for the property. And so that's what we really want to relate to, and that's what the number that we try to make sure that it's consistent throughout. Because we do get about 1,000 sales a year. But out of that 1,000, we probably only 400 or 500 that are actually good sales.
And what you're talking about sales, you can base your value of my house, for example, in part from homes that are very similar that recently sold, right? That's what you're talking about with sales.
Exactly right.
So if someone has the same square footage or roughly the same square footage, same style lot, same style house, and they sold for 120,000 and mine is valued at 110,000, you know that mine is very likely worth a little bit more.
Correct, right.
Let's talk about that a little bit more, because we talked about how we want our value, our actual value, our assessment, and our appraisal all right in that same range. How do you determine what my house is worth?
And that's what just mentioned, the sales.
But it's more than
track
sales.
Yeah, we look at square footage, we look at conditions of the properties, but that all goes together. The problem we have is, of course, is the motivation of buyer and seller. It will appear that it's an open market sale, but there's a lot of reasons. Somebody relocates. They're probably going to sell it for less just to get out because they don't want to have two payments, So we try to narrow that down so we make sure, and sometimes the sales are high, and we want to make sure that we can throw that out so it doesn't affect the other properties. And to keep at it. And it actually does start to fall in there. In 2017, we went with new software here for the city and did the last reval. So it makes it a lot easier now because that's all built in. We're working on audits right now, just finalizing everything and making sure there's nothing that jumps out at it. We look at anything, the highs, the lows, and make sure that we're consistent throughout. And why did this one go up more than the others? We try to narrow that down and try to figure out why. We may stop onto the property and talk to somebody. And just try to figure that out, because the best information we have is the best way.
Sure.
That gives us everything, because to try to compare bathrooms and kitchens and stuff, but we look at pretty much overall, and the sales are showing us that we're right in there right now. We're very much, and it's just been a very strong market for the last 3-4 years, and I think that's harder to believe. But Wisconsin's always been very fortunate. They only go up a percentage each year. Typically, Stevens Point's been anywhere between 3% and 7% a year, which is really good. We've had 10% increases now and stuff. And so typically you can go almost 10 years without being out of compliance.
Sure.
That doesn't happen. Everybody in the state got that. But the good thing about Point has been it seems to be maintained. We're not seeing the dropbacks or the slowdown, but the inventory is still low at every place.
Sure.
in other
Going back
communities.
to how we create the value, you look at comparable sales, but you also take into account any improvements I may have done, or maybe improvements that I didn't do that I should have. That can affect the value too. So if I build a new garage, that would increase the value. If I put in granite countertops in my home, same thing that we talk about when we're talking about securing our investment, right? You want to make improvements that increase the value of your home because that's an asset. So where do you get that information from? The new countertop or the bathroom remodel or whatever it happens to be?
That's built into our software based on the cost guides that we get from the state. They're determined beforehand. We updated all them records this year for the revaluation. So we're working with the newest cost guides. As everybody knows, the cost to build a new house right now is a lot more than it used to be. But I think what's important to know is that every one of them changes. You don't get dollar for dollar back.
Right.
And I think the biggest conversation I have, and this might not be answering your question, but one of the things that always says, well, we didn't do nothing to the house, but it went up. Appreciation of the market is big.
Yeah.
We know there's depreciation because the house got older, but that seems to be overtaken by the appreciation of the property. So doing nothing, your value still tends to go up.
Right.
But you're right, we do change for siding, windows, kitchens,
And you get that
bathrooms,
information
basement.
from permits.
Correct. And our field reviews when we're out there. But it does work the other way. We've looked at a lot of them that maybe the property needs some work, some deferred maintenance that was done, and we try to make them adjustments. And I'm very happy with, if the public needs to contact me and wants me to see something, I'm always more than happy to go to a property. So.
Sure, and we'll get that in just a minute, but I wanted to just stress that, if you take out a permit to remodel your bathroom or your kitchen, or you put on an addition, or you get a new roof, or you build a new garage or a shed, not only do you get information from the permitting process, but you also do drive-bys, get visual inspections. Hey, that isn't in my records. Maybe that's a new building. Or you can even use aerial views. We do that periodically too. And if you happen to notice that this property didn't have a garage and now it does, that triggers something. You can go out there and add it to the assessment and the value. So improvements to your home we want that, right? Because that increases the value of our personal assets.
Correct.
But we also need to know that. So if you've done improvements or maybe haven't done improvements to your home, we want the assessor's office to know about it too, so we can get the correct value. Now, generally, you don't go inside every home in the city during a revaluation, but you do that on occasion. Under what circumstances would you want to be asked to come to someone's home and take a look at inside?
Well, we always love to, because the more information we have, the better we are, the tighter we are in values and doing it. There has been some changes in the laws and how we go approach this. But I think our records are very good here in the city with the information. We're constantly updating information from building permits, from sales reviews, requested reviews. We have quite a bit of requested reviews. This year, knowing that we did the revaluation, people have contacted our office and want us to come out and see things. And that's the best thing we can do, just keep them up. And we also look at, okay, you have so many Cape Cods in the city or so many ranches. So we look on the average, you got one that's fixed up and one that's not. We know that range. We know what the bottom range and what the top range is kind of at. So that's what we try to rate it. The hard part, of course, would be, the best information is still seeing everything. And so we do try to do that on a regular basis. We send out letters throughout the year to do certain styles of homes sometimes and try to update the records. And even if we do this in an off year, we're not changing the values at that point, because that would be what we talked about being equitable between other properties. So if we see changes, a lot of times we will make that change on the next reval. We may note it now, but we will change it later.
Sure.
And just to keep it in line, because if you're not looking at every one of them, how do you pick on one property? But that's, I think, is more important than anything, is just trying to be consistent. We've always been very good with the Department of Revenue. Our approach to this is not always the top value. We're not chasing that super great value out there, but what we are is very consistent. When you run the numbers and you run your stratification of everything, you're basically looking at, your sales, are they within a given range? If it's 5%, 10%. So that's what we're looking at to make sure that it's consistent throughout. But everybody knows every house is unique. You can take two similar ranches that are 1,400 square foot, and one will sell for 150 and one will sell for 170. And it all depends on the motivation of buyer and seller. And that's where it gets very difficult, because it says, well, we just had a sale for 170 and you guys are at 150. How's that? That's what I do hear sometimes. And I do appreciate the city not picking on them, because we are looking at a consistency overall, an average. And we don't have to hit every sale. They're just looking at the overall for the city. Like I said, when the Department of Revenue equalizes the values, they want to make sure the city, the townships, and the villages in this county are all paying the same share towards the schools and the county.
Well, and you'll see that. I mean, even if you have identical houses, what the realtors always say: location, 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 right? A house that is near a park is going to be, or a school is going to be probably more valuable to someone. They're willing to pay more for it if they have kids or want to use those amenities, as opposed to, well, I don't know, living next to the mayor. Nobody wants to do that, right? So the value automatically goes down. So we take into account comparable sales, visual inspections, permits, and then if you have the ability, you go in to get a very accurate number. All of those things play into the accuracy of the assessment or the value that we give your home. If I get my assessment in the mail, and let's say hypothetically, my $100,000 house is now worth $150,000, and I'm like, Steve, you're crazy. Come on in. I don't know. You probably haven't seen my house. If I disagree with the value you gave me, what are my courses of action? In what order? What should I do to dispute the value that you give me?
Well, the first thing I would tell property owners to do would be probably take a breath because it is always a shock.
Yeah.
And some people are very aware of the market, knowing the changes. You talk to realtors, they will let you know. But the first thing you want to do is basically contact our office. The city assessor's office, we're happy to come out there. I prefer that. We have a procedure, it's called open book, and all the information will be on the notice that we send out with the valuation, and the dates and times, all that will be coming up. 10th, 11th, and 12th, I believe, of July
yeah.
is open book, and then our board of review. But during open book time, it used to be very common for everybody just to come in. Now most people just either call us or email us and just have some questions. You can look at it. You can also go online and look at assessordata.org.
Okay.
That will have all the values in the city on there.
Assessordata.org.
Right.
Okay.
And or the city's website. It will give you a link to it. But other words, I really enjoy having people contact me. We can talk on the phone. I can stop out at the property. I always like to stop and meet people at their homes. And just to discuss the value. You don't have to wait for that 10th, 11th, and 12th of July because you will be late in line. That has changed a lot now. We don't tend to get as many people coming in as we used to because it's all done prior to that. And to save time and save people from waiting in line, just give us a call and we can discuss it anytime on the phone or in person, anytime, just to get it out of the way for them.
Sure.
And then if you still don't agree, we can't come to an agreement on the overall value. The next one would be board of review. The board of review is held kind of like a court, and the people that actually run the board is actually city citizens here of the city, and basically they determine, you present, the property owner presents their information, I present ours, and the board will decide which one they feel is correct. So you do have that option, and beyond that is also court. You can go to circuit court, but
Yeah, hopefully it never comes to that.
and we don't typically see that usually, but no, I always said I always hoped that people would just contact us.
Okay.
I think I've always been very easy to work with. We might not always agree. We understand that, but I'd like to at least explain how we got there.
Contact the assessor's office if you get your assessment and you disagree with it. But ideally, if you agree with it, you're going to, your home should be worth what its value is, right? The assessment, the value of your home, and the appraisal ideally would all be equal. They never will be, but they should all be right in that range. And if that's the case, we're golden. If you disagree with the value, you think it's worth more or less, contact the assessor's office, and they can schedule a time for discussion or maybe a visit. Ideally, the visit is the most accurate way to get an idea of what things are worth. And if you want to go the more formal route, the open book is going to be coming up in early July. That information will be on the letter. You probably have gotten your letters already, but if not, they're coming very soon. And hopefully we can make this a smooth process. If anybody has questions prior to that, of course, by all means, contact the assessor's office. You can contact my office and I'll put you in touch with them. But Steve, I want to thank you very much for taking some time to explain how the revaluation in the city works and what it could or could not mean for us homeowners.
For more information about the citywide property revaluation, visit stevenspoint.com/assessor. Talking Point is produced by Mayor Mike Wiza and Stevens Point Community Media.